Bitcoin is up. And I was worried, Scott, about saying that because it might date this video, but that means this will probably be relevant for the next 10 years. I could be saying Bitcoin is up because we know it's going to go up and down with high volatility, probably for a decade. You could argue the volatility might drop and other coins might take over that volatility, but we're in one of those kind of crazy upswings right now, which brings a very different kind of emotions than the downswings. I potentially think it's more dangerous as a new trader. I call it the I got married in Vegas syndrome, where you end up making poor decisions, when in the good times, the 20th shot of tequila, the tattoo that you can't even read, versus the I got so depressed I jumped off the bridge type scenarios. What do you observe about traders in these uptick times that you try to remind your followers on Twitter to maybe just think of differently than, say, the bear markets that we've seen in a few months ago and a few years ago?
I've DJ'd for 20 years. I have my share of bad Vegas decisions and bad trading decisions as well. So I can definitely speak to this. I think that you're absolutely right. But that what you're describing at the dead bottom and towards the top are two sides of the same coin, right? They're the extremes of human emotion. It's fear and greed, but effectively it makes you do the same things, right? Which is make irrational decisions based on your emotions. And that's what you want to avoid. So it's FOMO, as we call it in this market, obviously, fear of missing out. The higher the price goes, the more you want the asset. I'm sure not anecdotally that you've had many conversations where you told someone they should maybe think about buying Bitcoin at 10,000 and they weren't interested, and then called you when it was 60 and told you they were buying. Right. And that's that same emotional reaction to seeing something go up, believing that every time it goes up, that means it's going to go up this much further, and buying it. So what I would say to new traders, if you do insist on trading, is control your emotions. It's almost impossible, by the way. That's the skill that I would say 95% of traders lack. And that's why they say 95% of traders, based on studies, generally cannot even beat simply buying a market index and sitting on your hands. But it's that control of the emotions on both sides. I don't know if it's more or less dangerous. It's certainly more dangerous if you're a buyer, but there's nothing worse than selling the dead bottom right before a bear market ends and goes up, right? I know a lot of people who sold Bitcoin at 30,000 within a month, and now we're looking at $47,000, $48,000 Bitcoin as we're recording this. So I would say that it's about controlling emotions. And when price is rocketing up, you switch your mentality to maybe I'll miss it, and that's okay. As a trader, you're still dollar cost averaging as an investor, but as a trader, maybe I'll miss it. But these are the areas of support if you're using charts where I would be interested. So buying the dip, basically, you change your mentality to buying the dip and selling the rip, as opposed to the opposite. So you look for those opportunities when price comes down a bit, but you still believe that the bull run is intact, and that's where you place your bids.
Yeah, I mean, you hit it on the head there. Trading is all about controlling your emotions, but it's easier said than done. Much easier said than done. And that fear of missing out is just that natural human instinct. I remember my first job was on Wall Street in 1993. I got hired there right out of engineering degree. And they gave me phones to the Board of Trade and the Mercantile Exchange. And I was trading government bonds and interest rate swaps. But no one taught me the mentality of trading. And I soon realized that they told me to buy low and sell high. We were trading derivatives, so we could sell high and buy low. But the natural human instinct, strangely enough, is to buy high and sell low, right? Fear of missing out. And then, selling on those lows when it's actually the time to take a breath and just look at those long-term averages, right? Go listen to, Raoul Paul for a bit, or take a step back and just think about the long-term aspect of that. And yet that's not what we do. It's very difficult to kind of control those emotions, but that's what we see. And one final thing you said there, which is interesting, the person that doesn't listen to you at 10,000 calls you at 60,000. I remember in 1999, I was in New York City in the dot-com boom. I was a CFO of a startup, and the taxi drivers, I don't know if you remember, were trading internet stocks. And I was like, what are you talking about? It was crazy. But if you remember when Bitcoin was hitting its highs last time, Aunt Margaret was all of a sudden trading Bitcoin. And that's when sometimes it's maybe overbought. Is that a sign that you look out for or not?
Yeah. I talk about this all the time. Mainstream is the greatest counter indicator, right? And when your family members and your cab driver and the guy who's cutting your hair start asking you about coins and mispronouncing them, at the very top, my barber actually asked me if I owned any Ethereum, right? Obviously meaning Ethereum. And I said, well, that could be a good signal to wear at the top. But I was screaming about this as a perfect example a few months ago when Elon Musk went on Saturday Night Live and everybody was asking me if they should buy Doge because he was going to pump Doge on Saturday Night Live. And I said, this is going to arguably be, I can't predict the future, but my prediction, I think this will be the greatest buy the rumor, sell the news event in the history. And that was the dead top, obviously, of Dogecoin, which is probably the best example I have ever seen of retail FOMO and the opportunity to get out right at the top at a very obvious moment. But it's interesting. Something that you said is that, they teach you to buy low and sell high. And I've always made the argument that that statement should be revised to buy, sell higher, right? Because giving the expectation of buying low and selling high gives people the mental the belief that they should be looking for the bottom and the top. And if you're a trader, actually, the momentum is in the middle, and that's where the meat is for your trades. So you don't try to buy the bottom. You look for the bottom to come in and then a confirmation of the bottom, which may be 10, 20% higher. When it flips, a key level back to support, and then you buy, and you don't try to find the dead top. You exit somewhere reasonably ahead where you make money. So listen, if you're buying Amazon stock, if you're investing in a market and you have a really long-term trade and you know that it's likely to trend up, buy and sell higher. You don't have to buy the bottom. And the idea of buy low, sell high makes everyone feel like they've missed out. If you tell someone to buy Bitcoin low and sell higher, they're never going to buy because low to them may have been 1,000 or 10,000 or 20,000 or 30,000.